Hello and good morning, folks. Welcome back to Almus Market Mornings with a slight change of host today. Now, before we go towards the market updates, I'd really like to appreciate the Indian team's strong performance in the ICIC World Cup. And just like how the Indian team has been performing really strong, Indian currency has also been one of the strongest performers in the Asian Pac. Although there has been a lot of action on the yield side, equity sides, currencies has been a bit sluggish. We have seen a lot of developments on the geopolitics. We have seen the central bankers being one of the quite active players in the market economies. And we also have the 5 billion swap expiry today. So, JK, there's things happening around the financial markets, updates around the financial markets, but not much action in the currencies. What is your take on this, and how should we be seeing markets in the coming week?
Good morning, Shekhar. Yes. Yeah, I think the overall currency space is definitely somewhat on a holding pattern, I would say. Like USD-INR held by RBI steadily below 83.30, and then of course downside is also limited because there are a host of factors that is keeping the rupee sentiment somewhat negative. More of global factors. Of course, we do have challenges on the flows also because we do see the report of FDIs this year being much lower than last year, and then FII flows have turned negative. And we also have the oil prices which are higher. So in fact, I'm also seeing a report indicating that the overall global pull out from equity markets of the mutual funds in the US and European markets also. So there is a bit of risk aversion that is also keeping the dollar bid. So overall, I think this 83.30 range should be safe, unless we have an unexpected, relaxation from RBI or an unexpected inflow that breaks the downside. So we should be set on that. But on the global market, the currency traders are still waiting for many events that are to follow this week. One eye is always on the war situation, where, as the international pressure mounts for a ceasefire, there was a bit of relief in the yields on Friday that took the 10-year yield back to 4.91. On Friday there was actually, I have to reframe that, because on Friday actually there was a fall in the yields because of the tensions that were still persistent. But as we enter the new week, the pressure on both sides to have a ceasefire has increased, and therefore the yields have actually gone up again. Now, the 10-year is moved towards 4.98, and so the dollar is remaining bid. Then the other factors that are keeping the dollar bid is the GDP data, which is coming from US on Thursday, expected to be in the region of 4.3%, and the consumption is going to be see a leap at 4%. And so US economy still continues to be very strong. We had recent data on retail sales and industrial production that also kept the scenario quite supported. One more thing you should know from various Fed members and even Powell was that the Fed is happy with the yields being higher. And because that is doing their job, they don't have to hike the official Fed rate. So there's little that they're going to do on the yield side. And if you look at what is supporting the yield, also is a huge supply from the US government with lesser and lesser number of buyers. And the US fiscal deficit for the financial year 23 has actually been 23% higher, and it is touching almost 1.7 trillion. So I don't see the reason why yield should back off fast, and that also is keeping the dollar well bid. But at the same time, why we are not seeing a bigger rally in the dollar is because dollar is kind of overbought. So it's consolidating here. A break through 5% decisively by 10% can push the dollar decisively higher once again after this consolidation. And people are also waiting for the ECB decision, whether they give a surprise hike, because market mostly is discounting no hike, and or whether they remain super hawkish because of the pressurizing crude prices. So that is the currency space that we are in. And if you look at the yen, which is in a space of its own, not breaking 150, but there are reports indicating that since the yields are rising in Japan also in line with the global yields, Japanese authorities may be considering another tweak to the yield control policy. So that is something that market is looking forward to. If there is unwind in yen, that can also support dollar against other currencies, because you will have the other currency pairs against the yen also being unwound and going down. So there's so many moving parts which I think market is still assessing how to. So I think at the end of this week, when we have the PCE core inflation, we'll have more clarity on the dollar's direction. In the meantime, we should expect more consolidation. On the yield itself, yes, we did dip on Friday, and again we are up as we start the week today. And the stock markets, of course, had some setback again on Friday, because after the raft of good news from corporates, we're back to watching the war situation and the yields, and markets are not comfortable at these levels of financial conditions. And also the KBW regional banking index was also down to the level that was seen in March, and that's again raising some concerns on the market. Currency volatility has been much more subdued, as I shared with you. The only data of significance on Friday was the UK retail sales, which was much weaker than expected, and people have been expecting UK to have challenges on their growth because of the hefty rise in the rates, inflation not coming down, and inflation, investment and consumption not so great. In fact, the public sector borrowing number also indicated that the deficits of the UK government is also increasing. So all challenges for the UK government as well. So that's where the space is. So, but the UK pound is generally following the dollar, and against the euro it is weak. If you look at the gold, which had rally of nearly 15% from the low recently, that's seen some profit taking as the international pressure on Israel and Hamas continue for ceasefire. So we are seeing some retreat from almost 2000 being touched, and then now we are at some 1975. Possible pullback to 1950, 1960 is on the cards, because market is quite overbought, but fundamentally well supported. Next move should depend on the direction of the yields to some extent, and also on how the US economy performs. And overall, my view is that if the US economy does not show signs of weakness, I think the yields and the attraction of the US dollar will sustain, and we should have the dollar performing strongly. Chinese yuan, of course, has some positive news for Chinese yuan is that it has surpassed the euro to become the world's second most used currency, as according to the data from SWIFT system. Although US dollar continues to be the major, obviously more than 80%, but euro has slipped into the third position. That just information that despite all these concerns about Chinese economy, Chinese yuan is being used for different reasons, of course, but that is what the fact is. So overall, it's a shortened week for us, and tomorrow being a holiday, and lots of events post tomorrow to digest and take a direction on the currency. Thank you.
Okay, that was quite good, JK. And yes, folks, there are certain challenges that the Indian economy has been facing, challenges in the form of flows in the last couple of months, as well as the FDI flows that we have been talking about. But overall, we've seen the central bank holding the fort, and the challenges from the oil also being a bit on the consolidating front, although the geopolitical chess has not yet ended. And it is one of the primary reasons for the bit of risk aversion, as JK mentioned, is being visible in the financial markets. The yields have been moving higher, which has kept the dollar on the bid side, but it is also the strong GDP and other macro data expectations which has likely kept the USD supported. And we've seen a significant move for the dollar in the past few weeks already, which has made, as JK mentioned again, the dollar in a bit of an overbought situation. Now we can expect some sort of correction, but it needs to be seen how strong this and sustained this correction would be. During the week, we do expect some bit of data or the updates from the European Central Bank, and whether it's a surprise or a no hike as per the market expectations is something that should be really seen. I mean, hawkish expectations from the ECB will also be quite an interesting outtake from the central bank. The last week's update, if we have to talk about, the UK sales data was weaker than expected, and already the UK economy is not having a good consumption of the investments, which has posed a lot of challenges on their growth. One really positive thing that was observed was the glittering gold. I mean, it did glitter really well, and we have seen a strong move on the upside for gold. Now, it seems to be providing some small retracements on the downside, but do we have any directional move coming up for gold? It needs to be seen and is a bit dependent on the yields as we have been observing. That's it for today, folks. We shall come back again on Wednesday as we have a shortened week and a Dashera celebration tomorrow. That's it for today, folks. Thank you so much for listening and see you back on Wednesday.